Hey, what's good, everybody? This is Gmac. Another video. I'm going to go over my Asia strategy. Um, I just did a trade. Wasn't very good. I didn't follow my rules, but I'm going to journal that and move past it. But I'm going to show you how I trade Asia. It's not the ATM model. It's a kind of a version I've made. I look at 7 o'clock. As you can see, at 7 o'clock, the algorithm starts really spooling. So we've got manipulation here. It looks like maybe manipulation back up, but I just watched the order flow, and what I saw, I got in way too quick, man. I got in here on this fair value gap, got stopped out, and then tried to go back in and got immediately stopped out, so I had to quit. I lost 300 and something dollars, so I locked myself out. But this is the trade I should have took. We disrespected this fair value gap right here. 1, 2, 3, bullish. We disrespected it here. Anytime we do that, when it's in a premium or a discount of the range, see if I can do this here. The range, the most recent range, I draw a fib. You can draw a fib from this to this, the Dillon range. And you can see up here for me, we are in a premium. So when we disrespected this, I would have been in right here in this wick as it starts coming down, and I would have got my 10, 12 handles, and I would have made my 350 bucks on both accounts, and I would have been like, yay, good job. But we didn't do that, and that's okay. I've had like 12, 13 winning days out of 14, so I'm due for one, and I'm glad it happened because this is how I'm going to learn. I'm not going to beat myself up about it. Um, I'm just going to journal it and review it and learn from it and move on. That's all. That's all we can do. But it's just simple. I don't trade. Um, I watch the 7 o'clock candle. Sometimes it hits, the volatility hits. If it's consolidating, I leave it alone. I come back and watch the 8 o'clock candle on the 1 minute chart, and I get the range, the most recent range, the most recent swing high and low, and I draw a fib on it, and I get the midpoint to give myself like a premium and a discount. And what I wait for is I wait for an inversion of a fair value gap, the first one like this that's in a premium, and then if we go back up to it and test it, I'm in. So this should have been my trade right here at about 563, 562, and I would have been out about 550. And yeah, and I'm kicking myself in the teeth right now. But that is simple. That's why I think I'm doing so well, is because I'm keeping everything simple. I'm not, looking for the most recent order block on a higher time frame when I'm trading Asia. We could go to the hourly chart and look. Let me take this fib off and look. I thought we were going to draw. The reason I was bearish that we would draw to this. We go from internal or external back to internal. So my draw was this fair value gap down here. So I had a higher time frame draw to go short. I just got in too early, and that's okay. I got to learn from it. We can go to a 4 hour and look and see. Same thing. But I usually stick to the hour down to the 15, and I saw, boom, we hit this, but it's not my time. We respected it. We come back up, and I just got in too early, and that's okay. But that's my model. I don't want to go too big on the trade. I look at 7 o'clock in that macro to see what kind of if we're we're showing some aggression, some volatility, and we did. We was boom 658 aggressive shot down. I got in on this institutional order flow entry drill. I thought, but I just got to review it and see where I went wrong. And where I went wrong was not waiting on the PD rate to fail. We've already took out a low. I wasn't in premium. I was in a deep discount trying to sell, and that was my error. So learn from that. Um, but my model would have been, we inverted this fair value gap in this candle. Okay, I'm waiting on it to come back up because we made a fair value gap to come back up in it. Boom. That's where I made all my money doing that. Bread and butter setup. And that's New York. That's Asia. I don't trade a lot in London, but New York was like this morning. Same deal. We'll flash back. 9:53 candle. We sold off. What am I doing? Going back too far. We sold off right at 9:30. So you could have took the short going down. Uh, Here, same thing. We inverted it here. We come back up in it here. Boom, we displaced down. Okay. We inverted bullish. You see this fair value gap here? We inverted it with this one. Okay, we didn't come all the way back down, but we respected it here. Same thing here. We inverted this one here. We come back down into it. Multiple entries to get in on these fair value gaps. That's what I trade is fair value gaps and a premium and a discount. And when I'm either in a premium or a discount, and one gets inverted, I'm looking for it to come back in that zone real quick, and that's my entry. And then usually it takes off. So I hope this helps you. I know it's short and simple, and my editing's not too good. But if you will use this, I promise you, you will have a high win rate, uh, and you'll make some money because I'm doing it. Just I'll do a supplementary video on this, going over internal and external liquidity, how that works from going from high to lows and from fair value gaps to high to lows, and how all that works in market structure to supplement this video. But I just wanted to give you a brass tacks, straight to the point strategy on you can use, and how I'm using it to take multiple payouts from these prop firms. So I appreciate you. Good luck to you. God bless you, and good luck trading.